since the securities exchange is frequently expected to be dubious, especially for a stock like Tesla. As a financial backer of Tesla, you may be concerned about what the year may hold for Tesla stock and pretty much any other stock on the chart. The American venture capital firm Morgan Stanley, however, offers a preview of what the future may bring for the automaker and suggests that this year could be a year of opportunity for Tesla's investors. Remember to watch through to the finish to get all the details, since you wouldn't want to miss this. Hi everyone, and thank you for returning to Tesla tomorrow. Following a 30.8% decline and a 7-day run of losses that resulted in a highly oversold situation and caused the stock to close at its lowest price since August 2020, Tesla's stock price recently experienced a big uptick. Despite this, Tesla stock fell 38.8% in December, setting the company up for the largest monthly decline since it went public in 2010. Analysts at Morgan Stanley, meanwhile, continue to hold out hope that Tesla stock won't be destroyed. In addition to encouraging their customers to purchase shares during a notable decline, the business claimed that the sell-off had created a buying opportunity for Tesla stock. Will this be a year of growth for Tesla and its investors? Let's solve the problem. But before we do, please remember to like, subscribe, and enable notifications if you enjoy this type of content, so that you may keep informed about anything related to Tesla. Recently, shares rose sharply, continuing their recovery from a bottom that lasted more than 2 years. This followed the release of fresh notes by Morgan Stanley regarding the company's sell-off, which the firm says has made it more appealing to invest in the EV manufacturer. Adam Jonas, an analyst at Morgan Stanley, stated that he thinks the sell-off was brought on by the EV market's increasingly unfavorable supply versus demand fundamentals, which were made worse by technical considerations in recent trade. Jonas restated his former stance that supply is anticipated to exceed demand, and that 2023 is probably going to be a reset year for the EV market. They penned, "Greater than we think 2022 to 2023 will be a reset year for the EV market, with supply exceeding demand, significantly reversing the previous 2 years of demand exceeding supply." As Tesla stock continues to decline, Morgan Stanley analysts see an alluring entry point. They just lowered their price estimate from $330 per share to $150, despite maintaining an overweight rating on Tesla shares. Adam Jonas of Morgan Stanley thinks Tesla may still succeed in the cutthroat EV industry, even if it is unable to satisfy anticipated EV demand in the future. According to him, companies like Tesla that are self-funded, have a track record of growth, and have comparatively cheap supply chain expenses might be relative winners in the EV market. There are still obstacles to surmount between a worsening macroeconomic environment and growing competition, according to Jonas, who discussed Tesla stock sell-off as an alluring entry moment for investors. He continued by saying that despite all of these factors, his company still thinks Tesla will increase its lead in the EV race as it leverages its cost and scale advantages to pull away from the competition, citing the carmaker's potential for future expansion. Morgan Stanley had earlier picked Tesla as one of its best selections for the year. The trading firm continues to view Tesla's shares as a chance for growth and value, despite the company's recent difficulties with its stock price. According to reports, Morgan Stanley's choice of Tesla demonstrated the company's then current excitement about the company. In response to Goldman Sachs' actions, Morgan Stanley not only kept its price estimate for Tesla at about $330, but it also doubled down, saying that even though 2023 would be seen as a difficult year for the EV industry, they are certain that a gap will develop between Tesla and its rivals. Recently, a number of Tesla EVs, including the majority of its Model 3 and Model Y cars, were eligible for tax credits in the United States. On January 1, 2023, the new $7,500 federal tax credit for electric vehicles was supposed to go into effect in the United States, although there were numerous unknowns. The requirements for acquiring battery materials and manufacturing components were the key ones, according to a recent announcement from the U.S. Treasury. The rules pertaining to such criteria will not be implemented until spring. According to recent rumors, Tesla automobiles might be eligible for this credit. However, the fact that eligibility will only be in place for a few months might be the biggest problem. For the first few months of the year, the new regulations will be more forgiving, allowing for bigger tax credits on more electric vehicles. According to the U.S. Treasury Department, this is because restrictions on new tax credits will not be implemented all at once. It's crucial to remember that Morgan Stanley reduced its price target for Tesla's shares from $330 to $250, and even in a bull market, the firm's current estimate is now at $440 per share, down from the previous $500. This suggests that the firm is fairly enthusiastic about Tesla. In their worst-case scenario, Tesla is predicted to be worth about $80, which is less than its previous value of over $150. From an objective standpoint, I do anticipate a significant upturn in Tesla stock this year, but with some doubts. This transition may still be hampered by a number of factors, including China's production problems and perceived demand, according to sources. Tesla was already preparing to stop the majority of its operations at Shanghai's Gigafactory in the last week of December, and the company recently halted manufacturing in China due to an increase in coronavirus infections. Nonetheless, the break fits into an already planned program. The most significant production facility for Tesla is the Gigafactory in Shanghai, which produces the Model 3 and Model Y, two of the company's best-selling automobiles, for a while. This might have a big impact on demand, leaving Tesla struggling with high inventory levels in its second-largest market, which was already anticipating a slowdown. Since fewer cars will probably be bought in the upcoming months, it might have an especially big impact on local demand. However, if Tesla's Shanghai Gigafactory has been concentrating on producing cars for export rather than giving local market demand priority, the company may sidestep that problem. The automaker has repeatedly canceled the factory's morning shift and informed employees they may begin their break early, but it provided no explanation for the suspension. The production pause may have been part of Tesla's strategy, as it was previously reported that the automaker intended to temporarily cease manufacturing of the Model Y electric crossover at the Shanghai Gigafactory in December 2022. Production was reduced by about 30%, all things considered. There is still much to anticipate from Tesla in the upcoming year, and the majority of it will probably be good. For Tesla, or any other stock, this does not imply that success is assured. The world economy is currently in a very precarious position, particularly in the United States, as the Fed keeps raising interest rates to combat rising inflation, as noted by a number of Tesla market analysts and even Elon Musk himself. However, as tensions between the United States and China continue to rise, supply chain inefficiencies might get worse, making it harder for tech providers like Tesla to deliver necessary parts. Nonetheless, investors can have a better understanding of the situation and prospects for the stock by examining Tesla's financials and future prospects. At the moment, Tesla has strong fundamentals, including high profitability and earnings, low debt levels in comparison to rivals, and steady rise in demand for all of its goods. There might be even more good news for Tesla's investors in the future, given its production ambitions with its semi-truck, which has already started deliveries. Tesla has yet another chance to upend the auto sector. In a similar vein, the long-awaited Cybertruck is finally coming to pass and might soon be available for purchase. These have the potential to increase Tesla's stock price and are anticipated to greatly increase sales in the upcoming years. What are your thoughts on Morgan Stanley's Tesla price target? Please leave your thoughts here. And don't forget to mention Tesla stock. Feel free to tap on the next video that appears on your screen to learn more about what Tesla has been up to lately.